In this video, I'll be going over the 2025 ICT Judas Swing model simplified in just 4 points. Let's get started. So the first thing you need to do is identify the market trend on the 15-minute time frame. Now, what I mean by that is it an uptrend or a downtrend? The next thing you need to do is identify the buy side and sell side liquidity before 8:30 a.m., which is our trading window start hour. Now, once you've done that, it all comes down to which pair you trade. So if you're trading Forex, it's between 8:30 till 11:30. And if you're trading indices, it's between 9:30 till 11:30. Now, for indices, you can pick out your buy and sell side liquidity at 8:30. But we just prefer to do it at 9:30 as that's when the US stock market opens. Now, if any of this isn't making sense right now, carry on watching as I'll be going over an example towards the end of this video, and I'll also be going over a model example for Judas Swing right now. So let's get started with the model first. So I've created a diagram here, and what we can see, the first thing we can see is higher lows and higher highs being created. I'll just change the color to make it a bit more clear. So higher lows, higher highs, just like that. Higher lows, higher highs, higher lows, higher highs. So we obviously know the overall trend is an uptrend. So once we've identified that, we can see a liquidity sweep happening right here. So this is our liquidity sweep. This is our manipulation. All Judas Swing is manipulation where price takes out a low, which obviously makes retail buyers think, okay, we're going in a downtrend now. And once that happens, Judas Swing then continues price moving towards the upside. So once liquidity has been taken out, we can see a break of structure, and then we can see, so the break of structure is right here, and we can see a fair value gap created. So I would mark this out as a fair value gap. Obviously this is just a diagram. Once I go into the live example, it'll be much clearer. So assuming this is our fair value gap, what we then wait for is price to simply come back down and tap into this zone. So assuming it taps into here, then we would be targeting a high, so this high right here as a minimum. So what I would do is place my long position at the start of this fair value gap. My stop loss would be at this low, and I would be targeting this high. Now, obviously, this is a 1 to 6 risk to reward. However, when it comes to any type of strategy, I like to stick with a 1 to 2 fixed risk to reward, as when it comes to funded accounts, it's just simple to pass, and it doesn't play too much with your psychology. I hope this makes sense. If it doesn't, I'll be going on to a live example in just a second. Now, before I do, I've teamed up with Instant Funding AI, a prop firm passing service. So I'll go ahead and show you guys right now. They can pass your prop firm challenge in under 24 hours with trader scale. You don't pay up front, you only pay after the challenge being passed. If they fail your challenge, you get a full refund plus the money you spent to purchase the challenge. Now, for people who don't want to go for trader scale, you can go with FTMO. You can see countless results here. $1,400 made. An FTMO account pass right here. If I click on it, you can see on the FTMO's website, 18th of December, the account was passed. Show you more results. You can see $200 made with the AI trading bot in a single day. Another $200 trade. You can see this was a 300k account that was passed, and here is a certificate of it, of the challenge being passed. So if you are interested, the link is below. Go check them guys out. And now I'll be moving over to a live example. Right guys, we are now on the live example on GBP USD. So the first thing we need to do is anticipate whether the market is bullish or bearish. So looking at the 15-minute time frame, we can clearly see that the market is in an uptrend. So overall, you can see higher lows, higher highs, higher lows, higher highs, and so on and so forth. So now that we've identified that the market is in an uptrend, we want to drop down to the minutes time frame to take our entry and wait for the liquidity sweep. So I'm going to drop down to the minutes time frame now and let's see what happens. So dropping down to the minutes time frame, we're going to let the chart play out and see what happens, and then we'll decide whether we're going to take this trade or not. So we're going to continue to let it play out. We can see that sell side has now been taken, but we are now just waiting on our entry, and once we find our entry we will then take the trade. So I see liquidity being taken, and we can see a fair value gap, so I'm going to mark out this fair value gap. Once I've marked that out, I'll be putting my long position down right here. We can put our take profit at this high, stop loss below these lows. So 1 to 3 risk to reward. Slow it down a bit and let's see what happens. And we've just been tapped into this trade, and let's see how this plays out. Now it doesn't matter if you're slightly out of the session, but as you guys can see, we did hit take profit within the session time. So we entered the trade at about, let's see what time we entered. We entered at 11:08 and we hit TP at 11:22. So in about 10-15 minutes we were able to hit take profit and get a 1 to 3 risk to reward. Now backtest this strategy and let me know what you think about it. Personally, I use it on my funded account and I've passed challenges with it. Let me know what you think. Hope you enjoyed this video. If you have any questions, leave them down below. Thank you.